Hey, everyone! Today we're diving into the world of credit cards. Whether you're a seasoned pro or just got your first card, using credit wisely is crucial for building a strong financial foundation. We'll be covering 7 powerful tips that can help you maximize rewards, avoid debt traps, and boost your credit score. So, if you're ready to unlock the full potential of your credit cards without falling into those common pitfalls, stick around. Alright, let's kick things off with the golden rule of credit cards. Always, and I mean always, pay your balance in full every single month. This is non-negotiable, guys. It's the cornerstone of responsible credit card use. Think of it like this. When you carry a balance, you're essentially taking out a high-interest loan from the credit card company. These interest rates can be astronomical compared to other types of loans. And trust me, those interest charges can add up faster than you think, quickly eating away at your hard-earned money. Imagine working hard all month only to see a chunk of your paycheck vanish into thin air because of interest. By paying your balance in full, you avoid those nasty interest charges altogether. It's like giving yourself a raise because you're not losing money to interest. It's like getting a free short-term loan from the credit card company. You get to use their money for free as long as you pay it back on time. Plus, it keeps your credit utilization low, which is a major factor in determining your credit score. A low credit utilization ratio shows lenders that you're a responsible borrower. Remember, a higher credit score unlocks better interest rates on loans, mortgages, and even car insurance. This can save you thousands of dollars over the course of your life. So, make it a habit to treat your credit card like a debit card. Spend only what you can afford to pay back in full each month. This way, you stay out of debt and keep your financial health in check. One practical tip is to set up automatic payments for your credit card bill. This ensures you never miss a payment and helps you avoid late fees and interest charges. Also, regularly review your budget to make sure you're not overspending. Keeping track of your expenses helps you stay within your means and avoid unnecessary debt. By following these practices, you'll not only avoid the pitfalls of high interest debt, but also enjoy the peace of mind that comes with financial freedom. Remember, it's all about making smart choices and staying disciplined. Ultimately, paying your balance in full each month is a key step towards achieving your financial goals and ensuring a stable and prosperous future for you and your loved ones. Tip number 2 is all about consistency. Just like you wouldn't skip out on paying your rent or mortgage, paying your credit card bill on time is crucial. Late payments can seriously damage your credit score, making it harder to get approved for loans or rent an apartment in the future. Plus, they often come with hefty late fees that can really put a dent in your wallet. To avoid this, set up automatic payments through your bank or credit card account. That way, you'll never miss a due date, even if life gets hectic. If you prefer a more hands-on approach, set up calendar reminders or use a budgeting app to stay on top of your due dates. Remember, building a solid credit history is about demonstrating responsibility and trustworthiness to lenders, and consistently paying your bills on time is a major green flag in their eyes. Now, let's talk about tracking your spending. This is one of the most crucial steps in managing your finances effectively. Without a clear understanding of where your money is going, it's easy to lose control and find yourself in financial trouble. It's easy to get caught up in the convenience of swiping a credit card without realizing how much you're actually spending. Every swipe feels so effortless, but the reality is that those small, seemingly insignificant purchases can add up to a significant amount over time. But trust me, those small purchases can add up quickly. A coffee here, a snack there, and before you know it, you've spent a considerable amount of money on things you might not even remember buying. Luckily, there are tons of tools available to help you stay on top of your spending. Technology has made it easier than ever to keep track of your finances. You can use budgeting apps like Mint or Personal Capital, which connect to your bank accounts and credit cards, automatically categorizing your transactions. These apps not only track your spending, but also provide insights into your spending habits. These apps give you a clear picture of where your money is going, making it easier to identify areas where you can cut back and save. For instance, you might realize you're spending too much on dining out or subscriptions you no longer use. Alternatively, you can go old school and track your spending manually using a spreadsheet or a notebook. This method can be just as effective, especially if you prefer a more hands-on approach to managing your finances. The key here is to find a system that works for you and stick with it. Consistency is crucial. Whether you choose a digital tool or a manual method, the important thing is to regularly review and update your records. By closely monitoring your spending habits, you'll be able to make more informed financial decisions and avoid overspending. You'll gain a better understanding of your financial situation, which can help you set realistic budgets and financial goals. Over time, this practice can lead to improved financial health and greater peace of mind. Remember, tracking your spending is not just about cutting back, It's about making conscious choices with your money. It's about understanding your financial priorities and aligning your spending with your values and goals. So start tracking today and take control of your financial future. Here's the fun part: credit card rewards. Many credit cards offer enticing perks like cashback, travel points, or discounts on everyday purchases. But remember, these rewards should be a bonus, not a reason to overspend. Before you dive into the world of rewards cards, take some time to research and compare different options. Look for cards that align with your spending habits and offer rewards that you'll actually use. For instance, if you're a frequent traveler, a travel rewards card can help you earn free flights, hotel stays, or upgrades. If you prefer cashback, there are cards that offer a percentage back on all purchases or bonus rewards in specific categories like groceries or gas. Just remember, always prioritize paying your balance in full each month. Don't let the allure of rewards tempt you into carrying a balance and accumulating interest charges. Let's talk about credit utilization. This is a key concept in managing your credit health effectively. Credit utilization refers to the amount of credit you're using compared to your total available credit. It's essentially a measure of how much of your available credit you are currently using. It's a major factor that credit bureaus consider when calculating your credit score. In fact, it accounts for about 30% of your overall credit score, making it one of the most significant factors. Ideally, you want to keep your credit utilization below 30%. This means that if you have a total credit limit of $10,000, you should aim to keep your balance below $3,000. For example, if you have a credit limit of $10,000, try to keep your balance below $3,000. This helps in showing that you are not overly reliant on credit and can manage your finances well. A lower credit utilization ratio indicates to lenders that you're managing your credit responsibly and not maxing out your cards. This can make you a more attractive borrower when you need to apply for loans or new credit cards. To keep your utilization low, you can either spend less on your credit cards or increase your credit limit. Spending less is the most straightforward approach, but increasing your credit limit can also be effective if done wisely. However, be cautious about requesting credit limit increases too often, as it can sometimes result in a hard inquiry on your credit report, potentially lowering your score. Hard inquiries can stay on your credit report for up to 2 years and can slightly impact your score. Remember, a healthy credit utilization ratio is crucial for maintaining a good credit score and qualifying for favorable interest rates in the future. Keeping your utilization low not only helps your credit score, but also gives you more financial flexibility and peace of mind. Another tip to manage your credit utilization is to make multiple payments throughout the month. This can help keep your balance low and ensure that your utilization rate is reported favorably to the credit bureaus. Setting up automatic payments can also be a great way to ensure you never miss a payment, which can further help in maintaining a low credit utilization ratio. Regularly reviewing your credit report can help you stay on top of your credit utilization and catch any errors that might affect your score. It's a good habit to check your report at least once a year. Discussing financial strategies with friends or a financial advisor can provide new insights and tips on how to manage your credit utilization effectively. By keeping your credit utilization low, you set yourself up for financial success and open doors to better credit opportunities in the future. So, take control of your credit utilization today and watch your credit score soar. Checking your credit report regularly is like getting a financial checkup. It allows you to spot any errors, inaccuracies, or signs of fraudulent activity. You're entitled to a free credit report from each of the 3 major credit bureaus, Experian, Equifax, and TransUnion, every 12 months. You can access your reports through annualcreditreport.com, the only website authorized by federal law to provide free credit reports. When reviewing your report, look for any unfamiliar accounts, incorrect balances, or late payments that you don't recognize. If you find any errors, dispute them immediately with the respective credit bureau. They're legally obligated to investigate and correct any inaccuracies. Regularly monitoring your credit report can help you catch potential issues early on and protect yourself from identity theft. Last but not least, never stop learning about personal finance. The more you understand about credit, debt, and investing, the better equipped you'll be to make sound financial decisions. There are tons of resources available online, from blogs and articles to podcasts and videos. Take some time to explore these resources and find experts you trust. Remember, knowledge is power, especially when it comes to your finances. Stay informed about changes in interest rates, credit card offers, and financial regulations. By continuously educating yourself, you'll gain the confidence to navigate the complex world of personal finance and achieve your financial goals. So there you have it, 7 powerful tips to help you use credit cards wisely and build a brighter financial future. Remember, credit cards can be valuable tools when used responsibly, but it's crucial to understand the risks involved and prioritize your financial well-being. If you found these tips helpful, be sure to give this video a thumbs up and subscribe to my channel for more personal finance advice. And don't forget to hit that notification bell so you never miss an upload. Until next time, take care and stay financially savvy.